The only way the central banks have to try and keep this ship going and not sinking is printing more money, which is making the situation worse. And we're trapped in this endless loop.
Hello, and welcome back to the CoinStories podcast. I'm your host, Natalie Brunell, and we are talking to some of the leading voices in Bitcoin, their backstories, how they were first introduced to Bitcoin, and their take on what the cryptocurrency offers. I'm so excited to share my guest for this episode is the brilliant Raoul Pal. Raoul's co-founder and CEO of Real Vision, one of the world's preeminent financial media platforms dedicated to helping the public understand complex finance and global economics. He's a former hedge fund manager turned entrepreneur turned crypto crusader, and he was also one of the small number of investors who predicted the mortgage crisis back in 2008, 2009. So he has a pretty good track record on being able to foresee seismic shifts in financial systems. I got to learn more about his background, his philosophy on Bitcoin, and how he feels about the future of crypto. Here's Raoul. Okay, so thank you so much for joining me. I'm so excited to speak with you. First of all, I just wanted to hear more about your background. I know that you're a mix of Indian and Dutch, but you grew up in India. So tell me your origin story.
Well, actually, my parents met on a blind date in Birmingham. My mother was a Dutch au pair. My dad was an Indian student in England. I grew up in England. I lived in India for a short part of my youth, lived in Calcutta, which was an experience at that time. I then moved to Spain. I lived part of my life in Spain, 10 years on the Mediterranean coast of Spain, and now I live in the Caribbean, in the middle of nowhere in the Cayman Islands. So that's the kind of background of that. My whole career was basically finance. I started in 1990 in the equity derivative market. A couple of years into that was the start of the hedge fund explosion, as many of the world's most famous hedge funds became very prominent in financial markets. And I decided to concentrate on that customer base as a salesman. And I got to know over the next decade the world's most famous hedge fund managers and would speak to them on a daily basis. I was kind of the guy in Europe. And I ended up running starting and running the hedge fund sales business in equities and equity derivatives at Goldman Sachs in Europe, and then eventually went on to start and manage a global macro hedge fund for GLG Partners, one of the largest hedge fund firms in Europe. So I've kind of been around for a while in the hedge fund and financy world.
Well, I'm kind of curious, why did you even become interested in finance? Like when you were young, is this what you always wanted to do, or is it something your parents were involved in?
No, Dad was in marketing. So he always wanted me to go into marketing. But I grew up as a kid in the 80s, and it was the era of Gordon Gekko, and people were making money. So you can't help it but be a teenager and see that and go, I want some of that. Also, I liked the intellectual puzzle of it all. I traveled an enormous amount as a kid. I saw the world as this beautiful puzzle to discover how does this work? How does that work? And then before I knew it, I'd started reading a few books that were kind of telling financial stories, whether it was Barbarians at the Gate or some of the other stories at the time, and then leading into stuff like I wrote my dissertation on junk bonds. This is the time when Michael Milken had developed the junk bond market and eventually then got prosecuted for stuff going on. But it was the big stories of our time. And I was at my dad's birthday party when I was just graduated. And I spoke to a friend of my dad's. He said, so, Raoul, what do you want to do now you've graduated? And it was a recession. So I was like, well, I don't know. I need to get a job first. But I said, look, my choice is kind of marketing like Dad did. And I could go and work for one of these kind of fast moving consumer good businesses. And that could be fun. Or I could go into finance. And the guy looked at me and said, look, let me give you some advice. He said, you can go and work for Mars and do incredible marketing campaigns for one of the most dynamic marketing firms in the world, and you can get free Mars bars. Or you can go to work for a bank and get free money. So I was like, that's what I want to do.
That's so interesting. Wait, so where did you study? And did you study economics?
I only got into one university, got one offer from one university because I'd kind of discovered, I did well at school, and then after that, I discovered cars and social life and having fun. And so I didn't pass all the exams I should have done. I got one offer in the end.
Oh, wow.
to University of Plymouth, where I studied economics and law. So I studied it then, and I knew at that point that finance was really what I wanted to do. Marketing was the other potential if I couldn't get into finance, because my degree wasn't that good. But in the end, I was the only person at the time when I started working for Goldman in about 97. Somebody called me up from personnel and said, by the way, you're the only person in the history of Goldman Sachs to have come from the University of Plymouth and be working on the trading floor.
Oh, wow. Well, that's so interesting. So at what point did you realize that you had a sort of a knack for trading and for this line of work? What was your first job out of school too?
First job out of school was the graduate training scheme in a company called Dow Jones Telerate. They were like the Bloomberg of the age. They ended up being absorbed by Thomson Reuters. But I had a graduate training job, and my job was supporting a product called Teletrack, which was a charting and technical analysis product, of which I knew nothing about. So my boss said, here's the book on charting, John Murphy's Guide to Technical Analysis of the Futures Market. You better read this and then try and figure out what the product does because you're supporting it. So, as a good graduate trainee, I did exactly that. And what I realized was that charts tell you the story. You can see everything that's happened and what's happening right now in any market, in any asset at any time. They're so powerful. So all the stories of all the financial markets can be absorbed super quick by looking at a chart, because what charts are human behavior. So, and it tells you people's emotions about a market or an asset or whatever. So I found that really good because I'm a very visual person. So here I'm able to now track hundreds of markets because I can look at a chart. And then I thought, well, okay, this is interesting. So it's really hard before that to figure out, why should I be investing in Germany versus France versus something? Well, I don't know. Do I need to look at all of this economic data and all of this other data? It's hard to figure out. But the chart would tell you, actually, you should do because it's starting to look like it's outperforming. Then you can do your homework and figure out, why is that happening? So you're not trying to waste your time trying to accumulate knowledge on everything.
Right.
You accumulate knowledge on what matters, and over time you build your knowledge base. So I found that it really worked for how I thought. And then what was the big surprise for me is, having got introduced to some of these big hedge fund managers, is that they thought the same way. Almost all of them started with a chart. In macro, which is this very top-down way of looking at the world, it's the only way to navigate everything going on. How else do you know what the Indian tech sector is doing, or cryptocurrencies are doing, or the price of copper, or the inflation rate of Eastern European countries? You can't. You need charts. It's the only way to process the sheer amount of information necessary to be a macro investor.
It's so interesting because I'm just starting out learning about charts, and I follow this one chart maker named Burak. I don't know if you know Trending Channels, that site. But it's funny because obviously it must be so different on a macro level, because as I stare at these on a daily basis, it gets very exciting in the moment, right? Everything's going up and up, and then out of nowhere it just crashes. And so when you're in it on the micro level, it's so volatile, and it's almost, you distrust the charts. And then when you pull back, they do absolutely tell a story and make sense. But I'm still kind of learning about that whole area.
The most important thing, I think, is the longer term perspective you have, the more likely charts will help you.
Yes.
The shorter term perspective, I find the much harder it gets. Other people are much better at the shorter term. But really, if something's in a long-term trend on a long-term chart, you kind of have a much better idea of, okay, is this company successful, this asset successful? But on a short-term basis, a lot of it's noise.
So is there a story behind how you got your Goldman job if they had never hired someone from University of Plymouth before?
Well, because I'd worked for two other investment banks before that. And I'd found myself a niche as the guy in Europe who spoke to all the world's biggest hedge funds. And one day I was at my desk, and actually we were about, NatWest, who I was working for at the time, the big UK bank, was about to sell their investment banking business to Bankers Trust, I think it was. And a bunch of us were deciding, do we really want to do this? And some of them were going to go off to Deutsche Bank. Some were going to go to the Bankers Trust thing. And suddenly I got a Bloomberg message from a guy called Emmanuel Roman. I had no idea who he was. And he's like, hi, I'm the partner who runs equity derivatives at Goldman Sachs. I hear you're the hedge fund guy to speak to. We're looking to build a hedge fund sales business. Will you come and do it? So I got approached directly because I think it was Paul Tudor Jones recommended me, somebody of that sort.
Yeah, and I remember you saying on, I think it was another podcast I listened to, that you got into a room with all these biggest people, the Paul Tudor Jones and, Stan Druckenmiller. I mean, how did that come about?
In my previous bank called James Capel, which is a famous UK stockbroking firm, we started doing a lot with people like Tiger Management, Julian Robertson, one of the most famous and largest hedge fund firms in the world. And that was very interesting. And we did some really famous stuff at the time in markets like South Africa. When South Africa opened up and Nelson Mandela won, we were really involved with that. And that had really got me interested, started speaking to these guys. But really what happened is when I moved to NatWest, I brought a whole team from James Capel across with me. I got a phone call from the guy who'd hired me and said, bit of a change of plan. NatWest have just hired 120 people from Morgan Stanley, and we're going to massively increase the size of this equity derivative business. Bad news is the job you were doing doesn't exist anymore. Good news is, what do you want to do? And I said, don't know, let me speak to the new boss, which was this new American guy called Rick Goldsmith. So Rick said, Raoul, what do you want to do? And I said, hedge funds. He said, okay, who do you want to know? And I wrote down the 10 largest hedge fund managers in the world. He said, fine, they're all friends of mine. Come over to New York next week and I'll introduce you to them all. And so be it. And that's what happened. And these guys were desperate for somebody in Europe to trust. And, Europe was much more focused market. A lot of people were active in Europe at the time. So in the kind of mid-90s. So, and going into 2000 because of the whole, rise of the euro, the whole EU, all of this stuff. So it was a big market for a lot of people. And so I was the guy. So it was fabulous.
This is just sort of an offshoot question, but there are so many industries out there where it's really about what you know. And I sort of saw the finance world as that. Other industries are more who you know, but is it people in general, the average Joe and younger people that might not have a lot of knowledge in the space, they look at Wall Street as sort of the elite, right? And they're making all these decisions. They're constantly communicating with governments, and we're outside of that. Is it about what you know in that space or who you know, or is it a mix of both?
It's a mix of both. The best people have both attributes. The best people are the people who network incredibly well, but add value to the people in their network. If you do that, you're immensely valuable. There's a lot of people who work on Wall Street who've gone to all the best universities in the world, and they're kind of identical robots, and they don't add value. Mm-hmm. They think they do because they went to the best university, but really, it's the people who get on with people, the people who are slightly different. They're the people who get remembered. They take a bit more risk. They think of more unique things, and unique thought is the most valuable thought of all.
Did you have a mentor along the way that you would pick out and that helped sort of shape your career?
I had a couple of customers who were very influential in my life, who helped me out a lot. One was a guy called Stanley Shopcorn, who was the vice chairman of Salomon Brothers, the famous investment bank, and then worked at More Capital, running all of equities for More Capital, which is one of the most famous hedge funds in the world, Lewis Bacon's firm. Then he also worked with Stan Druckenmiller. Stan and Stan had a fund together at the time. And Stanley looked after me. Paul Tudor Jones was somebody who always looked after me as well. So there's a bunch of those kind of people who were part of my journey all the way through.
So talk to me about the transition from Goldman all the way to GLG, and maybe what was your biggest takeaway from working at Goldman?
The biggest takeaway from working at Goldman is anything is possible. And that, Goldman, I kind of fitted in really well and didn't fit in at all. And that was actually quite a nice way to be there because you got remembered. So that worked very well. And I realized how easy it was, and that nobody was necessarily smarter than me. Not that I'm saying I'm the smartest person in the world, but Goldman, there's a lot of incredibly smart people, and there's people who are infinitely smarter than I. But as a rule of thumb, you can hold your own anywhere, in any company, with any customer or anybody else. That gives you an immense sense of confidence in what you can do.
So how did you transition, or why did you want to leave?
Because I found the culture somewhat restrictive. It was also 2000. We'd just reached a massive bubble, and I thought the bubble was going to burst. And the best way to trade a bubble bursting is not to be working as in a sales job, is to be working in a trading job where you can capitalize on that move. So really, it was a macro play for me. It was like, right, if we're going to have a bubble burst and a recession, I want to be able to trade it. So that's what I did. So I got a few job offers from customers, and one of them was from GLG, a guy called Jonathan Green, who was one of the co-founders of GLG. He said, listen, why don't you come and join us? And so I did. So he gave me a macro book, and Noam Gottesman, my other boss, who was the kind of senior partner of GLG, they, very kindly gave me a book, said, look, you're going to make some mistakes because you're a salesman. You need to learn how to trade. And I made some good mistakes. And then eventually myself and a guy called Ben Gill co-launched the Global Macro Fund and managed that for a few years.
It's incredible to me when I read that a person could, retire at the age of 36. So how did that really come about? And it seems like there were some phases that you went through where now it turned from not just making money, but really trying to change the world and moving to, what eventually led to Real Vision.
Yeah, I think retired was the wrong word. I think semi-retired, because what I'd done is I realized that quality of life was the single most important thing you could have. And how much did I want to compromise that by the potential of having an amazing year at a hedge fund and earning more money? And I wasn't sure. And I thought, you know what? I'd bought a holiday home in Spain, but I realized it wasn't really a holiday home. It was a huge house on 8 acres on the side of a mountain in a beach town in Spain, in the middle of a national park.
Wow.
And as soon as I bought it, I realized it wasn't a holiday home. And I'd been traveling a lot to Spain. I had a different house in Spain before then. And that was pre 9/11. It was post 9/11 as well, is that I was going there a lot. So a friend of mine said, how many times have you gone to Spain this year? And I said, I don't know, I'm going to check. And I checked my diary. I said 32 times. He's like, you're running away from something. I'm like, yeah, I probably am. Oh. So I decided to opt out of the rat race. It was time. So I thought, what am I going to do? I've made some money. I wasn't the richest man in the world. I thought, well, I could live a simpler life because I'm living in the Mediterranean. I've got my olive trees and my fruit trees, and I can potter around, but I want to stay involved. So I thought maybe I can use my experience, because I'm one of the more experienced people in the kind of hedge fund game, to write research. And maybe a couple of people will pay for it. So I called up in fact, when I quit GLG, I said, listen, Noam Gottesman, to my old boss, I said, listen, I'm thinking of starting a research service. He said, of course, and I will subscribe. So they were my first subscriber, and Goldman Sachs were my second. So basically I got underwritten, and they've been subscribers ever since. So that's 17 years later. They kind of set me off on my path. And then it so happened that my experience seemed to be applicable for many people. And I ended up, through word of mouth, building actually quite a big research service with just me on my own. Other people build research services with offices and all of that. It was just me writing from my house in Spain for the world's most sophisticated investors. And that was that.
That's so cool. I mean, but at what point did you realize that the information that maybe the industry and the investors were getting was different than, the average person who's working or has a 401k? And why did you want to help? 2008
came along, and it's something that many of us in the industry knew. The debt issues.
You predicted it.
Yeah, and it wasn't just about housing, it was debt everywhere. And it was like, this is going to blow up. So we knew that the next recession, this was going to happen. And so many of us were the epicenter of all of this thing when it happened. And we knew it was going on. And the average person didn't know. So friends of friends or friends of my parents would say, why didn't we know? My father lost money. That was me trying to protect him. But the guy who's advising him on his financial stuff didn't tell him. And all of this stuff. And I saw it around me. And that was pretty bad. Then you saw the rise of Occupy Wall Street, and that people were really angry about not knowing and losing their housing and didn't realize what had happened to the world that they thought they understood. And then I was in Europe, and 2011-12 happened, when we almost lost the whole of the European banking system, and we almost lost the whole of the EU itself. I mean, it was a terrifying period where I had to buy a generator at my house because I didn't think we were going to have electricity come the weekend, because we almost lost the banking system.
Wow.
And people were starting to hoard food. because we were worried, like Cyprus, we're going to lose the whole lot. And people, again, lost a lot of money. And it was at that point I realized this was not right. The financial system is broken, and nobody wants to tell the truth, and nobody's giving information to people to help them navigate it. And surely somebody has a responsibility. So I thought, well, I've done well out of this, and I can help. So it was the kind of rise of the internet, really, and the rise of video was just starting, that I realized maybe there was something I could do with reaching a larger audience through video. And that was the idea that came into Real Vision.
I think that's so wonderful. My family, actually, my parents lost everything in that crash. We're immigrants from Poland, grew up in the suburbs of Chicago. My mom had actually just taken out a second mortgage on our house. We finally had enough to have a townhouse after they had worked for about, it was at the time maybe like 10, 15 years after coming to this country, not knowing the language. And my mom took out a second mortgage to start a business that had always been her dream. And it hit and they lost everything. And I was in college at the time, so I didn't really understand it, but there was this just massive feeling of, I've done everything right. I've been, the good person, the taxpayer, like that's how my parents were feeling, is just getting totally screwed by the system, by politicians, feeling like there's no one standing up for them. And it's informed a lot of my views and fears and drives. And so I appreciate that there are people like you who are on the other side who know what's happening and want to inform people, because I feel like we're almost at another 2008, 2009 on the brink of something, right? I mean, you kind of agree.
I think we had it. We had, the pandemic was the accelerant, but we crossed the Rubicon. Is huge amounts of businesses don't exist any longer. There is a massive insolvency event that happened, but it was papered over by governments and the central bank. And rightly so, really. I mean, what were they going to do? But they massively printed money. And what it's done is it's starting to exacerbate, not starting to exacerbate, it's accelerating the divide between rich and poor, which is the other truth that nobody wants to tell, is what's going on. People know they're getting screwed, and they don't know why. The rise of politics has come onto this. The actual answer is people's wages haven't gone up in 40 years in real terms. And that is because we had the largest generation in history, the baby boomers, all come into the workforce at the same time. Then we had the rise of technology. So they're now competing because, they used to be typists, and then everyone starts using a computer, and, you start replacing people out of the workforce. Then by come 1996, the WTO agreement and globalization. So now you're competing against technology, and you're competing against other countries. Then in about 1987, so wind back 10 years, all of these people decided to have kids, the millennials. Wind forward to 2010, the millennials and their parents are in the labor force at the same time, competing against Chinese and Indian and Vietnamese and Turkish workers, and against technology, right? Everybody is screwed. So what did they all do? Well, if they weren't getting wealthy, they borrowed money, and the rise of the debt bubble. Meanwhile, the price of assets kept going up. So it meant that as a 32-year-old baby boomer back in 1980, they could afford to buy a big house pretty quickly. They could buy a reasonable amount of the stock market. Don't forget the PE ratio was 7. Bond yields were 16%. So they couldn't help but make money. Then cut to now, or cut to 2020, January 2020. The 32-year-old millennial has the most expensive house prices in history, the most expensive stock market in history, the most expensive bond market in history, faced with no opportunity and debt, coming out of university with debt. And then the world blows up.
Yep.
Now, what was interesting is actually the answer started to come out of that, the world blowing up. And that's as we start moving into a new era. So it is becoming, it's interesting that out of the worst adversity, the biggest recession of all economic history, as the system is essentially broken and is now being papered over just by central bank money, that new opportunities have arisen.
Yeah, well, I think this is a good spot to start talking about Bitcoin. And I know you were just talking about how you were in Spain during that time when you bought the generator, things were really crazy. That's around the same time when you first heard about Bitcoin, right? So tell me that story.
I realized what had happened in Spain, and I'm like, you know what? Somebody needs to start the world's safest bank. And that's a bank that would have no leverage, no rehypothecation. If you deposited money, it would put it straight with treasuries, with the Federal Reserve. So I started looking at this system because I knew a lot of family offices and institutions needed this because everyone was terrified of the banking system, and rightly so. And I went around the world trying to set this up, and we looked at a trust bank in Texas, a trust bank in Singapore, we looked at something in Switzerland. It's hard work to set up a bank. And then we had a global macro investor, my research business, roundtable in Spain. And one of my members, subscribers, who's an old friend, Emil Woods, was there. And he said, another ex-Goldman guy, another ex-hedge fund guy, he's like, you thought about Bitcoin? And I had looked at it. This was 2013, early 2013. Or maybe it was 2012, not sure. So I started doing more work into it and realized that Bitcoin could be an answer to a lot of this. This whole blockchain technology means that things like rehypothecation and those reuse of assets could be recorded, so we know who owns what, which is a big problem in the financial system. Maybe we didn't need banks. Maybe we didn't need to trust governments with what they do to the value of money. So I'm like, okay, this is really interesting. So I kind of started putting some thoughts around it and wrote an article for Global Macro Investor, which was the first kind of basis of a stock to flow model. I said, well, if it is digital gold, because that's what it was being called at the time, then let's look at the above ground supply of gold out of the total known amount of gold, and then back that into the same numbers we know for Bitcoin. And I said, with gold at 1,300, Bitcoin's worth about $1 million. And that Bitcoin at the time was 200.
Wow.
So people were like, this guy's an idiot, but it also got circulated around Silicon Valley very fast. People were like, oh my God, there's a macro framework for this thing. So I think I was probably the first person to build a macro framework. And I invested, and it went up 100% in a month. So I sold it and was like, well, okay.
You sold
that's
all
interesting. Because you're not used to assets going up 100% in a month.
You sold all of it?
Yeah.
Oh my God.
I made 100%. That's great. And then I followed the market, and then I probably rebought back in about 2015. And then I eventually sold out for 10 times my money, way too early, because I would have made 100 times my money if I'd held on a bit longer, because I got very confused about what was going on with the forks when people were trying to create different versions of Bitcoin. I'm like, I don't understand this. And at the time, nobody did. Nobody knew whether it was going to survive or not. And I'm like, well, I don't really understand. So I will take my money off the table. And I was happy with that. And then Bitcoin shot up. And then I spoke at the big consensus, I think it was the consensus event or the CoinDesk event, whatever it was, the biggest crypto event. And I got up on stage in mid-December, and I had to give the Bitcoin bear speech, even though I'd been a bull. And I think I nailed the top within 2 days at that event, even though I'd sold out my Bitcoin a lot earlier than that. People were like angry with me on stage. Like, this is stupid, it's ridiculous. And then, Bitcoin then suffered a tremendous bear market. And then I bought in again in 2019.
So I think it's really interesting what's happening to Bitcoin now in terms of just mainstream adoption and also awareness. And it seems like the pandemic was the perfect catalyst for that. And I know that you kind of went all in almost. So what happened there?
So if you go back to this narrative that I've been telling you, the global financial system is broken. People are not able to participate. The only answer the central banks have for this mess, so everybody takes on more debt. The only way the central banks have to try and keep this ship going and not sinking is printing more money, which is making the situation worse. And we're trapped in this endless loop. And it was very clear to me that the next recession, there's these two paths of the macro world and the crypto world, call it one new financial universe, and the old financial universe are going to meet. at the horizon point, which is the recession. That was absolutely clear, and I made it clear through the whole history of Real Vision from 2014 that this is going to happen. So then the moment happens when it's a pandemic as well. So like, this is the worst case, right? This is going to cost everybody gazillions. And Bitcoin collapsed as everything collapsed. And I'm like, this is the opportunity, because the only outcome is gigantic printing of money. And that is and Bitcoin, with its scarce supply and its answer for the future financial system, this is its time. So I went all in, and I shouted from the rooftops in as many places as I could to say, this is your opportunity. Here's your life raft to get out of this mess. And luckily it proved to be the right thing. And now really what is happening is a parallel financial system that's even more than a financial system. It's the new digital architecture of the world is being built. There's a new promised land, and people are migrating across at unbelievable speed. All my old clients and friends from the macro world are now living in this new world. Virtually none of them are left in macro, because the returns are so big, the opportunities, the ability to be optimistic and not pessimistic, while keeping one eye on the kind of burning city of the old, which is the old financial system, but going into this new beautiful world. It's discovering of the Americas all over again. And it sounds hyperbolic, but it's not. I think it's going to be the largest redistribution of wealth in all recorded history in the shortest period of time.
And I know this is one of the missions of Real Vision, is to help that kind of democratization of this financial knowledge and to help people learn about things like Bitcoin. But there's still such a hurdle, right? I mean, there's so many people out there that hear that it's just a bubble. They don't understand the technology. For the folks that are a little bit older that maybe can't navigate Twitter as easily, there is a wealth of information that they're just not accessing. Younger people, I think, maybe look at it as more of a trade and a kind of a fun meme, as opposed to really this kind of change of a global monetary system that's been monopolized for so long. So how do you see Bitcoin reaching that sort of mass adoption, or people really taking it seriously on a mainstream level?
So they are, and it's happening as the market cap, the value of Bitcoin goes up. It forces the banks, the pension plans, the sovereign wealth funds, the family offices, the asset management firms to get involved. So you might not know, but you will end up be participating in this through different mechanisms. It may eventually be in your pension plan, in your 401k. You just don't know it yet. So the financialization of Bitcoin and the acceptance is happening. It doesn't require every individual to understand it. Like, you and I don't know how Google works, but we use it. We don't need to understand this stuff. You don't understand all the companies that you may invest in your 401k. Maybe you've got an index tracker. You have no idea what companies are in it. Can you name the 500 companies in the S&P? No. But if you just accept that there is a whole new investment world that has massive potential upside, but is still quite risky, well, certainly if you're younger, you might take that bet. Because what are you going to do? Try and buy record expensive housing? Well, people are now, because they've managed to borrow money, but it's hard. So, and people are moving out of cities, so you can find cheaper stuff. So it's the opportunity. And we've seen that last year, 2020, the millennials got financialized because they got given stimulus checks and they thought, well, this $1,200 is worth nothing to me. What's it going to do? And I'm at home, so I'm going to trade it. And it just happened like magic.
Yeah.
People opened brokerage accounts in their millions and started learning how to trade. Bizarrely enough, they started with options, which is not where people normally trade, but that's what Robinhood have made easy for people. Yeah. And people learned a bit about making and losing money and investing. And that whole process drove people in. And it's also driven people into crypto. Because I said a while ago, they needed, everybody who was under the age of kind of 35, under the age of 40, needed something to participate in with their savings. Where were they going to make their retirement money from? And here it is. It's on a plate, the biggest thing ever. And the crypto market currently is only worth $2 trillion, which is a lot. But the global equity market's 100 trillion, the global bond market's 100 and something trillion. So it could still go up 50 or 100 times from here over the next 10 years to catch up. It's also the fastest growing in market cap asset in all recorded history, the largest price appreciation of any asset class in all recorded history. I mean, if you want an opportunity and you don't mind taking a bit of risk, this is the biggest one you're ever going to be given. It's a whole new system being built in front of your eyes.
I know it's so exciting that you say that. And I know Pomp, who I also interviewed for this podcast, he's always writing the high percentage of appreciation, that 500% up. And it's just incredible because you think about I remember in the 90s, my mom was working at a bank teller. The interest rate on your savings account was 8%. And here we are entering a territory where we might get negative interest rates, right? And then you put your money in Bitcoin, and yes, it's a volatile appreciating asset, but it could go, the sky's the limit, right?
Well, on average, it's gained 213% a year since inception. I mean, literally nothing has ever looked like this. And why is that? Because it's built on network effects. The more people that come into this network of money, the more use cases that get created, the more valuable that network becomes. So it goes up in an exponential way. And that is something unique, because financial markets have never dealt with exponentiality except in some equities like Facebook and Google and some of these others that were network effects themselves. They were built on networks. We haven't really dealt with this before. And so we're dealing with a whole system going through a network effect, mass adoption at the same time. It's extraordinary.
So how would you describe the future of the crypto space to someone who really knows nothing about crypto?
Everything that has a value, and even things you don't understand have a value, are going to be exchanged digitally without necessarily a bank being in the middle. So that may be how you pay for things on the internet, how you earn money, how you lend out your time for work, how you earn a living, how you sell some of the rights that you have, your intellectual property rights, or even maybe you're a student and maybe you want to give up some share of your future earnings to pay off your university debts. Or there's so many things that are going to be changed by this. We've seen it with things like NFTs, which are non-fungible tokens, which is now people's ability to create authenticity in digital art that can get traded. Now, it's not actually just about art. It's about music rights. It's about communities. It's about even charitable communities. There's all sorts of things that's going to find ways of monetizing. And so people are actually going to get liberated in new ways. They'll monetize, and most people won't even realize it's cryptocurrency. They'll just get used to having different payment systems that all work together with the same wallet. That, if you operate in the Real Vision system, it's the Real Vision token. And if you operate in this system, it's that. And when you save your money, it's in Bitcoin. And they'll all be just part of our lives. And people get used to it. It takes a while, but over time, people just get used to this new system.
So can we talk a little bit about central bank digital currencies? Because do you think that there will be this unification of Western central banks under a single currency? And how would that affect Bitcoin?
Central bank digital currencies are the central banks acknowledging that Bitcoin and cryptocurrencies have changed the world. And it's a much better way of running a currency system, payment system, infrastructure system, settlement system, custody system. So they're saying, fine, let's do this for the money system. And they kind of learned this over this pandemic. It's very hard to get money into people's hands directly. So if we've got interest rates at zero, we need to figure out a way of having monetary policy that works. Hence, central bank digital currencies that will work in the modern digital era. Where they go, who knows? What they use them for, who knows? How they can use them to maybe incentivize you to become a saver and me to become a spender, they can do that. They can individualize it, because smart contracts, Ethereum smart contracts, they exist. We can change the terms on different people. Okay, that's super interesting for monetary policy and economic behavior. But there again, there's another big problem in the world. The problem we haven't talked about in all of this big monster of issues is the US dollar. The US is 25% of the global economy, yet 88% of all transactions on Earth. So there aren't enough dollars for a system that needs dollars. So it creates breakages. And those breakages are when emerging market currencies collapse. We've just seen it with Turkey. We're seeing it with Brazil currently. We've seen it all over the world. Argentina. The world doesn't need this dollar. And the dollar tends to be cyclical. And when it goes up and down, it affects all the price of commodities because they're all priced in dollars. So if you're South African or Brazilian or Australian or Indonesian and the price of the dollar goes up, the price of all commodities falls and you get less money. And you've probably got dollar debts because you're earning dollars. It's a mess for everybody. Nobody wants it. We want a stable world currency. Mm-hmm. And Facebook came along and said, we want to start a global stable coin called Libra. It's going to be a basket of all the world's currencies. So it's going to be really stable. So anybody around the world, whether you're Nigerian, whether you're Indian or English or American, can use it, and it's not going to move around a lot. It should be the perfect payment platform for everything. And the central banks went, whoa, stop there a second. You're going to take over the entire world's currency. And so they decided that they would not allow Facebook to do that they could do a US dollar stablecoin and maybe a euro one and maybe a yen or whatever. And that if anybody was to create this basket, it would be the central banks themselves. Now, it's not been agreed that it will happen, but the IMF have talked about it. They call it kind of a new Bretton Woods moment where we build out a new financial architecture for the world. One of them is this globalization of taxes that Janet Yellen's been talking about, where we don't have tax arbitrage between countries. So people like Google can't seek the cheapest tax structure by moving abroad. But the other thing they talked about is, should countries get together and create a world currency, which has been floated around by the IMF in the past. And digital currencies make it much easier to do. So there's a potential. Now, does that get rid of Bitcoin? No, it's just a more digital world. But if they give it certain attributes, like if you want to be a member of that basket, you're only allowed to print 2% new money each year, then this thing looks much more like Bitcoin than it does the current fiat system. And so maybe that would alleviate the need to have as much need to use Bitcoin urgently, that urgent need that everyone feels right now. It would change. So I think that could be interesting. Obviously, governments always cheat, central banks always cheat, it will never last. But it might be something. So if there's something to slow the adoption of Bitcoin, it will be the central banks getting their acts sorted out and not debasing their own currencies.
Do you envision an outcome where a U.S. digital currency ends up offloading U.S. debt in sort of a reset, and then the new currency without legacy debt could be so strong that it competes with Bitcoin, or you don't need Bitcoin anymore?
Yeah, I don't know. And the answer is none of us know. There's a possibility somewhere within this, as you say, there's a kind of rebasement of the old debt and a relaunch of a new currency where it's all clean up. I mean, that's pretty common. I mean, Brazil's done it like 8,000 times, and so many countries have done that. So it's kind of like walking off the gold standard and back on the gold standard. So it's possible, but it kind of feels like the genie's out of the bottle with the cryptocurrencies, that you wouldn't get the adoption of the new central bank currency because we don't need it anymore. And that's so even though there could be this world currency basket, etc., the genie's kind of out of the bottle.
What do you think the greatest threat is to Bitcoin then? Do you think that it is the digital currencies? Do you think it's, a government coming in and saying we're going to tax unrealized gains? Could they ban it the way FDR banned gold? I mean, what's the biggest obstacle?
Well, everybody talks about all of these things. I think the biggest obstacle is if the central banks do something that is less egregious to their own currencies. I think that's one thing. I think taxes don't help, but there's tax on money. If you make money in things, you pay taxes. Now, if they change the tax structure, people figure a way around it, particularly in an instrument where you don't actually need to come back into the fiat currency regime. So right now with DeFi and decentralized exchanges and all of this stuff, you don't actually need to come back to a bank account. So governments need to be careful here, because this is not a market to irritate, because this is a market that can stay offshore and can be driven underground by technology, and there's nobody to sue because it's all code. So I think there's a careful balance between, destroying their own system and finding some sort of way to keep people on board. So I don't think any of these things happen. I just think over time, the adoption happens and governments try and slow it a bit so it doesn't happen too fast. And they try and catch up with regulation, which is going to take a long time. They're going to be way behind. And there'll be some ups and downs as they try and figure it out. But at this rate of adoption, we're at about 125 million users of cryptocurrencies as of today. If we continue to grow at the rate we've been growing at, we will hit 1 billion users in the next 5 years. If we add Facebook DM, launching with 2.5 billion users of all the Facebook network and giving them the ability to have a cryptocurrency and a stable coin, let's say half of those people adopt it. That's 2 billion within 5 years. And then the central bank digital currencies are coming. So we're kind of talking 2.5 to 3 billion people will be using cryptocurrencies in the next 5 years. It's not stopping anywhere. There's no stopping this.
Well, I know I've heard you say that you have 98% of your portfolio in crypto, and I know you're.
It's actually 100%.
It's 100% now. Okay, so let's say there's the average American person who probably, especially in this pandemic, has lost maybe their business or lost a job, or they're trying to figure out how to make ends meet. Maybe they have a ton of debt. Maybe it's student loan debt. Maybe it's a mortgage. Do you think those types of people should also go all in? Their net values maybe 50,000.
No, because that becomes like a casino. Can I make this all work if I do this thing? And that's dangerous. If they wanted to, but there's enough upside in this asset. It's not about how much it moves this year. If they just said, listen, okay, fine, I'm in a pretty shitty situation, but if I can start investing a couple of $100 a month, and I can keep doing this, and I can do it on my PayPal account. And if I can keep doing this for 2 or 3 years, that money might be tens of thousands of dollars, or even hundreds of thousands of dollars. That's probably game changing from $200 a month. So you got to think of it in those terms. Don't think about, can I save myself and get myself out of this awful situation in 1 year by putting everything on the line? No, that's a really dangerous thing to do. Can I take a longer term bet and say, you know what, maybe this Raoul guy's right, and over the next 5 to 10 years, I can make some real money. Maybe this is the chance for the little guy to make some real wealth. Well, at $200 a month, $100 a month, $50 a month, somebody can do that.
I think that's great advice, especially for people that still think it's too expensive. And as it goes up, I have people, it's the FOMO aspect of Bitcoin where they're not sure, and then it goes up 20,000 more, and then they decide to go in, and it's like, you guys, it was expensive at 10, it's going to be expensive at 50, it's going to be expensive at 100, but you don't want to miss out, right? But the last thing I really wanted to talk to you about is more of a big picture thing, and I know that's the macro world that you've lived in for so long. There's a macro guy that I follow. I'm not sure if you know him, David Hunter. He's predicting the biggest financial crisis in the history of our time, way bigger than 2008, 2009. And it's because of all the leverage that's happened. And so I just wanted to kind of talk to you, because I also have heard podcasts where you talk about how you've gone to a safer place. You're not in equities anymore. You have some puts on S&P. Do you think that is accurate, that with all this leverage, there's going to be a crash that's much harder than March?
No.
Okay. Can you talk to me about it?
We had the biggest economic event you or I will ever live through. What happened was that the outcome, which is financial Armageddon, was hidden or alleviated by the massive printing of money. So when you talk about what actually happened, is the central banks printed as a percentage increase of money. I don't know what the number was, call it 50% increase in the amount of money available. Basically, they devalued everybody's savings by that. And the price of assets exploded. So it meant it became even harder for us to own the stock market or housing and all of this. So the financial Armageddon has happened to everybody, but nobody sees it. You've been robbed of your ability to save for the future. Completely robbed of it. And in fact, Michael Saylor makes this point, is since they discovered the monetary genie of quantitative easing, which is a fancy word for debasing your currency, they've actually lowered the value of the currency by 15% a year, every single year, which is why everybody is so pissed off, because they don't realize it's happening, but they can't get back to where they think they should be. It's because it's all now out of their control. And it's the same with the pensions crisis and all of this stuff. It's all interrelated. So David might be right, but we're in the middle of the biggest financial crisis in history. We're just looking the wrong way. It's the value of money itself, not the value of the dollar, which people get confused. It's not inflation, like the price of food going up. It's the value of fiat money itself devaluing. So you have a less good standard of living now and in the future than you did in the past. And the only way to make that up was debt. And so this whole system has made it much worse for people. But as I said, on the horizon is the answer. The answer is there is this new system being built that is massively divisible. So Bitcoin may be $60,000, but it also means I can put in $1. Right? That fractionalness doesn't exist. You can't buy an apartment in Central Park, but you can buy a share of a Bitcoin. This is game changing.
I know that you say we're in the middle of this crisis, but one of the things that some people are saying is there will be like an even bigger dip than last March in terms of just all the assets, everyone liquidating. It could, we could see a massive drop in Bitcoin. And you were talking about the cliff of death for European banks. So is there an update?
And that's it's still there, but it's essentially gone because the monetary printing disguises it. Okay. So if you were to look at the chart of the European banks, which have been falling since 1990. I mean, it's shocking. If you were to divide them by the ECB balance sheet, they've basically all gone to zero. If you were to do the same with General Electric and divide it by the Fed balance sheet, it's at zero. These are zombies, the whole lot of them. And they're all based around debt and old business models. So they've gone. It's that when you devalue, if you change the value of the denominator, which is the dollar, then the price looks like it goes up. But the reality is this hasn't. So it's all broken. The European Central Bank knows that this banking system is not repairable. People don't get that. It's just not repairable. It's done. So that's why they're pushing for the central bank digital currency, because they've got no monetary mechanism, because the banks won't lend money out because they're broken.
Did you ever think you would live through this kind of time? I mean, now that we live in such a globalized world, I think you're right that a lot of people are looking the wrong way, and it's so political. And when you watch the media, you're almost paying attention to the wrong things. And then I'm also really saddened by the fact that you hear things like there are a ton of young people, millennials or Gen Z, that want communism, that want more state control, that want there to be more expansion of money. They think it's a great idea. And yet here we are faced with the consequences of what
because
monetary.
Everybody feels like there needs to be a better answer.
Yeah.
So how am I going to get my money? Either give me an economic opportunity or give me some money. Neither of those things are actually happening in a way that manifests itself with actually people getting wealthier. If you want to blame anybody, and I wrote a long article about this, there's only one person to blame. It's actually World War II. And actually World War II was World War I. It all came from World War I caused World War II. World War II, the end of World War II caused the baby boomers. The baby boomers destroyed the world. There was too many of them. And that is everything we've lived through. The rise in debt, the excessive valuation of stock markets, the whole thing. And they all had kids all at the same time as well. So they kind of destroyed the world around them. And people are looking for blame. they can only blame themselves, or you can blame their parents, really, I guess.
Yeah. But with that and with crypto, there is this great opportunity. So I guess as we wrap up, what is your advice to the person that's maybe learning about crypto for the first time? They're still skeptical about it, or they're just worried about where to really put their money. Should they be liquid? Should they be in stocks? Should they be in crypto? What's your big takeaway?
Stop listening to the experts on Wall Street because they've not helped you. Start taking control of your own life and understanding what it is you're trying to achieve it with your life and your savings and how to best get there. And the first answer will always be invest in yourself. Create a business, be an entrepreneur. Create the highest return out of your man hours or woman hours. Do that first and you're ahead of the game. Then think, when I've generated some money from that, what can I do that will then make that grow a bit further in the future? And you'll realize that something like cryptocurrency gives you a very skewed opportunity to the upside that most assets don't give you. So those two pieces of advice should see most people through.
I just want to ask this last question out of curiosity, because a lot of the things I've listened to, you've had some great conversations and learned so much over a glass of wine with various amazing minds around the world. So what is your favorite glass of wine, Raul?
My favorite glass of wine, I lived in Spain for 10 years. I've had a house there for 20. My favorite glass of wine is from a region in Spain called Rioja. And there is a wine called Viña Tondonia, which is a really old style. They've been making the wine the same way for 180 years or 150 years. Viña Tondonia, you can buy it all across the US. There's a Reserva, or if you're really lucky and you find the Gran Reserva, it's amazing stuff. I think I've sold thousands of cases on it because I wrote a whole Twitter thread on Rioja and how it's the most underpriced great wine in the world. So that's what I would recommend.
Thanks so much for listening to this episode of Coin Stories. I'd love to connect with you if you have questions or guest requests, so feel free to get in touch on Twitter @Nat Brunell or Instagram @Natalie Brunell. Take care till next time.